Hello everyone and welcome to my weekly analysis for the precious metals market. I'm JR. Today's Monday, June 8th, 2015. It is 5:30 p.m. Eastern Standard Time. So today we're going to do a two-part video. The next video I'll do tomorrow. But today we'll have gold and silver and the Dow Jones. Tomorrow we'll do the US dollars, platinum, and palladium, and also do some ratios as well. Okay, so let's get to the weekly analysis for gold. This is your weekly chart here on gold, and again, still finding some support in this key level here, 1167. This level was key level to the on the upside. Okay, at 1231. I actually thought we actually tested this level. I thought we were going to continue to go higher, but I think in leading up to last week's data, I mean, just a lot of data last week, from unemployment all the way to auto sales, manufacturing, and leading up to last week, we had that decline, okay? Again, this being a weekly chart, every candle you see here does represent 1 week. And really nothing too serious. I don't think anything in any of the data that came out last week suggests that they're going to do the rate hikes either sooner or later. If anything, the IMF just came out with a report. I'll also show some reports on tomorrow's video. But the IMF did say that the Federal Reserve should wait until next year for their rate hikes. But at any rate, let's get back to the technicals. 1167 key level. We don't want to see the weekly chart close below this level. This week, right here, the week of March 9th was the only time gold has closed below this 1167 on a weekly basis. So again, as of now, we don't want to see a close below this level. If we do see a close, this could very easily break down and go down to my target area being around 1050. That's your weekly chart. The stochastics are still pointing south. Okay, so your 20-day moving average is above us, pointing down to around 4 o'clock now. That's fairly bearish. Your Bollinger Band is at 1150, so I wouldn't be surprised if we test this area here. If we penetrate this level a little bit deeper. Okay, that's your weekly chart. On the daily chart, we did not want to see a close. We actually saw the close that we were looking for. This was the close that we were looking for, roughly 1214, 1215. A close above that level should have been very positive, and that's what happened. Market moved up for a couple of days, and then it just broke down again, leading up to last week. And as of now, the weekly chart is finding some support here, but I'm not going to take this level as a serious level of support. So, at this point, we want to see if this level is going to be the level that's going to hold. But if we break down below this level here, 1153 to 1131, we're probably going to go down to the 1050. It'll probably be a great a shorting opportunity, but also it'll probably present a phenomenal buying opportunity. We'll see what happens. Okay, silver chart looking a bit more constructive than gold, and the reason why I say that is because silver is still respecting this downtrend. This uptrend. Let's start with the weekly chart. So this is the weekly chart on silver. What we want to do is we want to find some bullish candles here within the next couple of days. So we want the market to move up, and we want to finish off the week at least within this area above 1650. I think if we can do that, then this trend line, that basically means that this trend line held, and we're going to continue to go higher. But as of now, at least on this weekly chart, it looks like we are below this line. On the daily chart, it doesn't look like we're below it. It looks like we're actually just at the line. So again, based on how these computers, because most trading nowadays is computerized, based on how that goes, that's how we're going to see if we're going to break this trend line. But if we do break this level 1660, then I will most likely be looking to test last year's low, which came in at around 1430. And I will be looking for a test of that level. At that point, I will look to find some support right here, roughly around 1430. But also keep in mind that this long-term trend line coming from all the way back in 2003 should also give us some support, as well as the Bollinger Band. So a confluence of support here at these levels. Okay, a confluence of support at these levels here Okay, so anywhere between 1184 all the way up to 1432, I would probably make my last purchase roughly around this level here, around the 1430. Maybe between 1350 and 1430 will probably be the last time I'll buy long-term positions. Anytime I buy below that level, if I do buy below that level, is most likely going to be on the shorter time frames, on the 4-hour charts and on the daily charts. But I will not buy any more long-term positions. Again, I believe that $14 would be a phenomenal price to get in. We'll see if the market will even go that low, okay? But that's your weekly chart. Again, a break of this trend line, I will be looking to target at least the last year's low. Let's look at the daily chart. Again, daily chart, the triangle still holding. But definitely in a pattern where we are creating lower highs and lower lows. So these are your 3 established highs, and this is your established lows. This is a low, that's a lower low, and now we're looking to create another low and establish a low. Okay, we'll see what happens, but we need this trend line to break before we can call this bearish. All right, that's your silver chart, and the last chart I'm going to do would be the Dow Jones. This is your Dow Jones right here. We can clearly see that the trend is now broken. Okay, I'll look to find some support around the 17.7 area, and if that does not hold, which again, based on this trend break, I don't think is going to hold. It might come back up, retest this level, but at this area here, what you want to do is you want to sell. So if the market comes back to 18,000 even, you want to sell, and you want to sell it against around 18.2. With a target of at least 17.5, possibly even lower. On a long-term basis, this Dow Jones, this is what you want to look for. Okay, this level right here, it's key level, 17,000. Why? Because this is the trend. The trend has been the market has been riding this trend here for quite some time, since 2009. Okay, this trend, especially when we look at the monthly, we can kind of get a perspective of how overbought this is. The stochastics are way up there, and they've been up there for quite a few years, and they are being followed by absolutely no volume whatsoever. Okay, that's definitely not good. You can't support a rally this size without any volume. Okay, so again, on a short term, this is what you'll be looking for. You'll be looking for a break of this trend line again below 17,000. You're going to be in trouble, and but ultimately this is the level where you want to break, and I would say it's going to be a wrap for the Dow Jones, right? But again, the Dow having a very hard time getting above these highs. It came above these highs early in mid-March. Okay, it created slightly new highs, but immediately broke down. That's when I called the false breakout, and now I'm calling another false breakout. Again, I do expect prices to come either here to the 17.5 or at least to the 17.1. Again, you fall below that, and this market could be in a lot of trouble. So really, the equities is not safe right now. Bonds are not safe right now. I think the only logical thing to do is to buy what's low and sell what's high. And if you ask me, silver, especially silver is down over 70%. From its 2011 highs. Anytime you can get in and save yourself. Right now we're down 68%, but from its lows, you're down 71%. You can get into any asset class that's down 70%, and you should do fairly well depending on its fundamentals. And if you look at the fundamentals right now, it does not look good for the economy. Central banks are stressing. Central banks are driving these economies down to the ground, and the only safe haven out there is the precious metals market. And if you ask me, again, based on these price levels, it just doesn't really get any better than that. At this point, what we're doing is we're looking for the reversal. We're looking for that area of higher highs and higher lows. As of now, we are still kind of mixed. You got a high, a low here, a higher low, and right now we're trying to see if we're gonna beat if we're going to go below this low here at around 1550. All right. If we stay above this level, that could be very constructive. If we fall down below 1550, that could bring this market back down to test last year's low at around 1430. All right. I'll keep you guys updated later on this week, but I'll do another video tomorrow with the US dollar, platinum, palladium, and some ratios. And I'll also throw in some fundamentals. A lot of big names falling, Amazon and a lot of bigger companies just taking big hits after big hits. They're already down over 15-20%. Those are some of the indicators that you want to look at when the big boys start to fall, that you might have a crashing stock market. Let's see what happens. You'll get that next video tomorrow. I hope you guys have a great rest of the week. Bye-bye.